Good morning. Good morning. Thank you everyone for joining us here. I'm Mark Phillips with Harvested Financial, and we are here with the Daily Bread to talk about the markets. So just a quick reminder for everyone before we get into this, that nothing here constitutes financial advice. This is solely for the educational purposes, and this does not constitute an offer to buy or sell securities in any manner. And any advice would be dispensed under the terms of a contract with Harvested Financial and via our electronic portal. So now that that is out of the way, let's talk about what's going on in the markets here, everyone. Markets look down a little bit. I'm looking at SPY right now, off 85 cents, rallying a little bit from the overnight lows, but we are off 22 basis points in SPY. We are off 45 basis points in QQQ, and IWM is the odd one out, up 17 basis points or 33 cents. So what are we looking at in the market today? Well, one of the names we talked about yesterday was PayPal and how PayPal is one of those crypto proxies. So I actually want to pull up another interesting Bitcoin proxy, and that's MSTR. So this is actually the name that clients come to us most and ask, how can I get access to Bitcoin-like exposure via the equity markets? And MicroStrategy is a fascinating example of how to do so. So MicroStrategy is an business intelligence mobile software type company. It's actually been around for almost 30 years, and they have been incredibly active in buying up Bitcoin. So I'm going to pull up their market cap. So they're about a $3 billion company right now. With stock trading around 307. But they own something like 41,000 Bitcoins as of their last buy. So they've been aggressively buying up Bitcoins and continue to do so. They've issued debt to do so. They've sold shares to do so. So MicroStrategy's believed to own close to $800 million worth of Bitcoin right now. So that's 41,000 coins at a $19,000 price, just shy of $800 million. That means something like 25% of the market cap of MicroStrategy could be attributed to the price of Bitcoin. So I'm going to share my screen right here and sort of talk about what we might think about here and ways to play the options. So I'm looking at the options chain right now, and I might go out a little bit. One note is that MicroStrategy is one of the marginally less liquid names. So I think if you're used to tuning into the Daily Bread, you will see us trading SPY, IWM, QQQ. Those are our benchmarks. And with those names, you're used to seeing a lot of different expirations. So you're used to seeing weeklies. In SPY, you're used to seeing Monday and Wednesday expirations also. But in MicroStrategy, we only have a few. We have December, January, April, July, and D. So there are only 5 expirations on the board right there. Not only that, we got 5 expirations on the board, but these strike differences are much bigger than we're used to seeing. This is DEAST. We're looking at strikes every $10. If we go out to April, same thing. Jan, similar. So there aren't even $5 strikes in this name. So that's going to give you a lot less flexibility in terms of being able to put on a position and having that sort of fine-tunedness that you can really zero in on your risk and reward. However, it's a great proxy, highly volatile. The name's actually trading pretty close to about what the implied volatility of Bitcoin is. I believe when I was looking up on the LedgerX platform yesterday, their implied vol is approximately around 80 for Bitcoin. So MicroStrategy is a little bit higher, all the way out in DEAS 96, but the near term a little bit lower. So let's go out a little bit in time, because I think letting this play out over time is definitely an interesting kind of play. And one of my favorite proxies to think about here in terms of just how volatile this name is and how much movement we're looking at. We go all the way out to April, so 128 days. So that's 4 months that we're looking out into the calendar. We are looking at a straddle here that's 75 plus 78. That means we're looking at a $153 straddle, actually $154 straddle. So a whopper of a straddle. That means that $154 straddle is almost 50% of the stock price. So 50% of the stock price, you'd need to move in either direction before you made money. If you bought that 310 straddle, you would not break even until stock closed above 460 or below 140. So let me pull that up. That's actually a really interesting thing to look at here. So I'll actually do it by buying a call and buying a put, or said that the wrong way, buying a put, buying a call. And let's just what if that, just to see how monster that looks. Here we go. So that's your straddle. So, the price that you pay is always going to be your defined risk in that straddle. So that's all the way down there, 16 grand. So, $153 times 100, 100 shares of stock per options contract. So it's all the way down there. So that's that break even all the way up there at 460. And that's that break even all the way down there. We need a big move. So absent that, now, of course, the benefit of the straddle is this unlimited upside. Although you actually only make 16 grand if it goes all the way to zero. So that's an interesting note. You'd risk 16 grand if it stops right here, but the most you could possibly make if it goes all the way to zero is 16 grand. You don't actually even make 16 grand in this name on the upside until it goes to 600. Wow. So really expensive vol out there, and something we absolutely want to think about when constructing a strategy. So I'm going to do a little bit of a flavor of the sort of our amplify trade structure that gives a real bullish tilt to the name, but provides a really nice defined volatility structure. So we're going to be capturing volatility premium, leaning bullish, and benefiting from this high elevated vol, but also leaning into something. So I'm going to pick my center strike up a decent amount. So, if we're trading 310 right now, we're actually down 9% this morning, or $30. So, that's what an implied vol of 100 or a little over 100 will do to you. So I'm going to pick my price target kind of high up here. So I might go maybe $50 up. So maybe pick this 360 strike. I'm going to sell 2 of those. Now I'm going to buy one of those 400s. And that gives me 40 points, but I really want some nice defined risk. So I'm going to do 40 points, and then I'm going to go all the way down to 260. So what does that look like? Well, looks like we can enter that trade for about a $33 credit midpoint. But here's another really interesting thing, is just how wide these options are. So I'm going to highlight that real briefly before I do the what if, but to get into that spread, it's $13.60 at $53. So there's almost a $40 width in that spread. Now, that's because these options are $10 wide. It's because these options, whoops, I'll just move that screen. Those are $10 wide. And it's because those are $10 wide. 4 contracts, $10 wide markets, that's a $40 wide market. So what does that look like here? We have to always zoom out the price just because it's such a whopper of a name. But how can we play that defined volatility? If it hits our price target, we're looking at $7 grand, $7,400 in profit. If we whiff and this keeps tanking, our max risk is actually only around $2,600. So that gives us a real nice protection, because on the upside, if it continues to go, we're actually seeing $3,500 gains once this runs past 400. So a really nice defined risk setup where we sort of have a better than even money proposition that MicroStrategy continues to run. And we set ourselves up with a really nice fat max profit zone should it stay right here. So our max profit zone is going to be anywhere where we can earn above that upside yield. And we're going to see it across 20, 40, 60, 80, almost $80 of zone that we're going to hit that max profit, from 300 all the way up to 390. So maybe closer to $85 or $90 of max profit, and some really potential great outcomes here if we shift up. Now, granted, this is over the long term. You're going to be in this strategy for 120 days. But if you are long-term bullish on MicroStrategy as a company, and especially on their holdings of Bitcoin, this is a great way to capture that super high implied volatility and tilt your exposure bullish with a really nice defined risk reward. A little over 1.2 to 1 in terms of ratio of your gain to your loss. So check that out. Check out all kinds of option strategies at Harvested Financial. We're building model portfolios that deliver option strategy success to our clients. Go to harvestedfinancial.com/pomp and you will get $5 only for your first 3 months here. That's 50% off our minimums. So tune in every day for the daily bread. Check us out at harvestedfinancial.com and we will be here trading options strategies